Hey everybody, this is Kevin, a CPA that does financial planning, and often I say that, and maybe some people are like, well, who the heck cares that you're a CPA? But in this case, with the C.A.R.E.S Act, which is the coronavirus big stimulus plan, it's actually very helpful. So I will first say that anybody that would like to talk with me, a client or anyone, client family, we're happy to talk with you, and we are here to help. I'm happy to get involved and chat with people about their own situation. There's three groups I'd like to thank. Sergeant McCoy, which is our my CPA CE provider. They have information on this new C.A.R.E Act. The AICPA Personal Financial Planning Division, and then the third group is Michael Kitsis, Jeff Levine, who I'm going to be using some of their slides here on this presentation. I want to give them tremendous credit. They tell us planners what we need to know. So those three groups are extremely helpful. Anyway, so I'm going to talk in this video really about the recovery rebates. So the recovery rebates are also known as the free money. That's what a number of people have said to me. How do I get that free money? And so I'm going to talk a lot about this in this video. This is, that you're going to get payments. We don't know exactly when right now. Have another webinar on this Wednesday. I'll know more then. But we know that people are going to get up to $2,400. I said up to $2,400 if you're married filing jointly, then $1,200 for single head of household married filing separately, and then an extra $500 for each child that's under the age of 17. So the AGI thresholds, and this is, again, where being a tax geek comes in, adjusted gross income, threshold, married, filing jointly, we start to see what's called a phase out. Now, a phase out does not mean, hey, if you hit this number, if you make 160,000, you ain't getting any. That's not what it means. A phase out means that when you hit $150,000 of income or more, you start to lose some of the money. And I'll show you a chart in a moment. But the phase outs are 150, 112, 5, and 775 respectively. And then the payments are reduced $50 for every $1,000 over the threshold. Individuals must have a work eligible Social Security number. So it's only for people that have a Social Security number and are not claimed as a dependent. And they need to have had reportable income in 2019. And we'll talk a little bit about the 18 versus 19 because there is some caveats there. All these things have caveats, by the way. So if you hear me say something, don't think, well, this is absolutely gospel. That's why we need to look at your situation. The second part, which I'm not going to talk a lot about here, but I will talk about in the next video, is that you can take money out of your IRAs or your 401ks and not pay the penalty of 10%. You can also take a lot more money out of your work 401k. Usually it's 50,000 is the maximum. Now it's 100,000. So again, we don't recommend you just do this without thinking about this with your financial plan. But for those that have lost their job and the 401k/IRA is really the only place they can get a pool of money from. If they don't have other pools of money, then this is something that you may want to consider. So the distribution of the 10% penalty is waived, but you still have to pay taxes. So if you're going to have a very low tax year in 20 because you've been furloughed, laid off, etc., that might be a strategy. So a lot more on that. The other thing is too is that you don't have to pay all your taxes in 1 year, but you have to choose it. You can choose to pay have your income over 3 years and pay your taxes over 3 years. Again, I think planning is the key here. So other provisions is your RMDs, and people that have RMDs know what they are. If you don't know what it is, that means you probably are not taking required minimum distribution. They're waived in 2020. So for people that are taking money out and living on it, doesn't matter. For people that are taking out the required minimum distributions, and we have a number of clients that do this, and they move their money from their RMD to their brokerage account, and then we still invest it, but they have to pay their taxes, we don't have to take it out for 20. That's terrific. If you turn 70 and a half in 19, you don't have to take it out for 19 or 20. So 2 for 1. The 5-year rule is only for inherited, so I'm not going to talk about that here. This is kind of a feel-good thing, and I think it's good. I mean, a new $300, and they call it above the line deduction. All it means is that if you do the standard deduction every year, for married couples, it's $2,440 for 2019. You take the standard deduction, well, you gave away money to charity, it doesn't matter. They're allowing you to put this on top and give $300 and get a tax deduction. Now, I don't know the exact amount, but I think it's like $112 of the 300 is the maximum tax deduction, something like that. It's a 37% tax rate, the highest income. And then student loan repayments. If this is not you, but if you have children or grandchildren that have student loans, let's talk about this. You get a 6-month time period where there's no interest accrued. This is an interest-free loan, but there may be reasons why you don't want to do this. If you're in a forgivable loan situation, which some people are, this is an awesome opportunity because this counts as part of that 10 years for the forgivable loan. Unemployment compensation. Now, here's kind of the two-part thing that makes it kind of tough is that there's unemployment compensation benefits if you're unemployed, but now companies are going to get money and get non-recourse loans if they made you unemployed, if they take you back real quick, if they have less than 500 employees, if they take you back real quick, you might not get unemployment benefits, but they have to pay you and they have to do certain things. So these two things kind of go together here, but they've increased the benefit by $600 a week. They bumped it up, and this was a political hot potato here. And that's because, people said, well, people are going to be making more money being unemployed than they would if they went back to work. And so I don't know how that's going to shake out. I am told that the average unemployment is 400 and something dollars a week. It's not that high. So we're talking it could be $1,000 instead of the average 400. Unemployment benefit will be available the first week of unemployment. It used to be there was a holding or a waiting period. No waiting period. Now, when will all this happen? Well, that's the part we don't know. It's up in the air. And then the small business benefits. So certain small businesses, and it's many small businesses will be able to either take a loan from the government, okay, 4% maximum. And I'm not going to go deep into this, but if you have a small business, please follow this information that comes in the near future. But 4% loan is the maximum they can charge you. And this is what we call a non-recourse loan. Non-recourse. It's a way of saying you don't have to pay it back. As a matter of fact, you can on purpose not pay it back, and then it becomes a grant. So lots of caveats. I don't know, maybe a dozen caveats here. So lots of reasons to find out more about this. Such loans are eligible for full or partial forgiveness. That means you don't have to pay it back. I mean, that's the best kind of loan, one that you don't have to pay back. It's not really a loan. But there's lots of caveats what you have to do if you have a small business. You're going to go to a bank and get the loan, check with your CPA. There's also some payroll tax credits for qualifying business not receiving the loan. So here's where it gets messy. Do you receive the loan? Do you not receive the loan? It all depends on what your wages are. If you're offering health care, that is included. A wage is typically the box 1 on the W-2, but this also includes health care, and it also includes retirement account money, up to $100,000 per person for all of those things. So more to come on that. And then employers are eligible to not pay payroll taxes. I mean, it's 7.65% of your employees when you employ someone. If you're a small business owner, you know you have to put that in every 2 weeks, or your business will be shut down. Well, now you can pay them end of 2021 or 22. Now, some of the things that are important, I think, for everybody to know is that a small business owner who's terminated people can say, I want to hire you back. They have to hire you back if they're going to get some of these benefits. But it's a reason for small businesses to keep people employed. I love that part of it. You know, a lot of times we all hate on the government, and they deserve it. But I think there's some really neat things in here. I think there's some things I'd prefer they didn't do. But anyway, I think there's some neat things. So let me go to the free money part now. So first, some stats. They estimate that 90% of taxpayers, and when I say they, this is the KITSIS group, estimate that it will reach 90% of taxpayers. So, I mean, this is a great stimulus. If the virus ends and people, or when the virus ends, I should say, people can start spending this money, it will affect 90%. That's terrific. I'm not going to get into what a refundable tax credit is. For many, even if you make too much money in 2020, you don't have to pay it back. I will show you that. $1,200 for individuals, $2,400 for married couples, and then an additional $500 per child. Again, well, let's talk about dire straits. When I was in high school, college, Money for Nothing was a huge song. And, so Jeff Levine said, we're in dire straits right now. And so therefore there's money for nothing. Again, maybe it's not money for nothing. Our bondholders are paying for this and taxes in the future. I get all that. But money for nothing, checks for free instead of chicks for free. Get that? Haha. Anyway, so let's go to what the numbers are. Here's where the phase out. Now, what a phase out is, it means it starts to be lost. It doesn't mean it's lost at these numbers. So then here's I think the chart of the presentation here. Let's see if I can make it just a little bit smaller. There we go. So this is somebody who's single. 75,000 starts to phase out. By 100,000, it's gone. Head of household, 2 children. Well, 1 child is here, 2 children are here. Starts to phase out by about 140, 160. I don't know if those numbers are exact. I'm looking at the chart as you are. And then married filing jointly, 1 child, starts to phase out by 150, by about, I'd say 190, 195. It's totally gone. So here is the part that's very confusing. It's going to be based on your 2019 tax return if you filed it. Otherwise, it'll be based on 18. So here's the planning opportunity. If you made less money in 18 than you made in 19, it may be beneficial for you not to file 19. Now, if you've already filed it, you got ahead of the curve. That, what can we do? But if you've not filed 19, let's not file it if 18 income is lower. Okay, if 19 income is lower, here's the part that's really hard. We have to do it fast. We don't know how fast. Okay, and the reason why we don't know how fast is we don't know when the Treasury is going to say, all right, it's based on what we have right now. So we don't know that. So what Kitsis advises, Jeff Levine, they say to be paid as soon as possible. But potentially not until May. So this is when the money is going to be paid. So we don't know if you hurry up and file your tax return, if it'll be soon enough. So they think the checks are coming in May. I think that's pretty good. I'm going to have another webinar on Wednesday. So Social Security recipients will receive it direct deposit in whichever bank account that you use. Others will get direct deposited based on your refunds of 2018 and 2019. If you did not get a direct deposit, it will be sent in the mail. This is going to be a mess. Not going to worry about it right now, but it's going to be a mess. So here's the chart. Okay, so on the left here, we say 2018, 2019 income. So again, we want to use the lowest year, I guess. I mean, look, I want you all to get the free money. So if income is lower than the threshold in 2018 or 2019, that is, let's say it's $150,000 for married filing jointly, you will get the rebate in May, and you will keep the rebate. Now, if income turns out in 2020 to be higher, you get to still keep the rebate. So they're not going to claw it back. That's usually the words we use. If income is higher than the threshold in 18 and 19, what about if in 2019 you're a pilot and you make 250,000 in 18 and 19, and now in 20 you've been furloughed? Well, if you're going to make less income in 20, you don't get the money now, which is really when you need it. But when you file your 20 tax return, you will get it then. Okay, very important. If you've been laid off, fired, whatever the words are, and you're going to make a lot less money in 20, you can still get it. But based on 18 and 19, you're not going to get it now. And that's the reason why it's yellow. It's not green, as it is up here. Now, what if your income is lower than the threshold? And then In 2020, your income is higher than the threshold. So in 20, you end up, and they use the toilet paper salesperson, manufacturer for 20. All of a sudden, your income goes from $100,000 married filing jointly, and you own a toilet paper factory, TP, and now you make $500,000. Well, you get it now, and you get to keep it. So you don't have to pay it back. It doesn't get clawed back. So this is the area here that kind of stinks. But let's say that your income is higher than the threshold. So you're married filing jointly, you make let's say $200,000. It's too high. And then in 2020, you make more than $200,000. It's too high. Well, no recovery rebate now, and none can be applied against 2020. I promise you, this is a lot easier if you just tell me your income. We can go, all right, is it higher than the threshold, or I'm pointing at lower? Is it lower than the threshold or higher than the threshold? What will your 2020 income be? Again, this is what we call tax planning, maybe even financial planning because the money's coming now. But again, thank you, Michael Kitsis. If you want to know about your free money, please contact us. Thanks for watching. Take care.